can't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground then it go off. Yeah, hit the ground then it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year.
Yes. Good morning, everybody. Happy Monday. Welcome to the best morning show in finance. This is the morning show on Stock Market TV. I'm Spencer Israel. We've got JC Parets. We've got Steve Strazza, and they are fired up because it's Monday. What's on the show today? Let's see. We're talking about real estate. We're talking about altcoins. We're talking banks. We're talking the Russell. We'll take your questions. We've got Kimmy Sokoloff, options Sean McLaughlin, and our featured guest today, Caleb Franzen from Cubist Research. He'll be on, or Cubist Analytics, sorry. He'll be on at 9 o'clock, so a half hour from now. A lot going on. These guys are chomping at the bit. Hello, everyone in the chat. I see you.
All right.
That was the remix. That's what that was. That was the remix.
Is that what that was? Is Spencer frozen? Spencer's having issues, huh?
Spencer's going to be the voice of God today. I got a feeling.
Spencer's going to be the voice of God today, which is interesting because I'm the one that's at the beach. You know, isn't my internet the one that's supposed to be bad?
See, but it could be. It's probably not, but I learned last week from John Carlo that it's like all of our internets together in Restream. And if anyone is like a weakest link, it causes a problem.
Oh, am I the weakest link this time?
No, but we all did speed tests last week while you were out, and you did not do a speed test, sir.
I did not do a speed test,
No,
but my speed is money.
I'm the weakest link today somehow. I'm not sure why. I'm on Ethernet. I'm connected. I don't really know what's going on here.
Can we talk about how Strazza rocks the All-Star Charts gear more than anybody?
Yeah, I do. And it's always been that way. Don't act surprised, right?
It's true. Somebody once told me recently, they told me, this is God honest truth. They work for a hedge fund. They're like, I would take like 10, 15% less salary if I had more swag.
You know how I feel about swag.
That's crazy, though.
I don't know if I would take 10, 15% less. Don't get any ideas, but sponsors, hit me up. We'll talk.
I'm just telling you, this is somebody smart who I respect, and that's what he told me. He's a younger guy, but still. I thought that was pretty funny. That was very aggressive.
Yeah, no, same salary plus swag. I don't know what he's talking about, but anyway.
JC's house shopping in Avalon.
Are you really?
Am I a real estate investor now?
I mean, let's do it. I love me a good beach house, man. You excited?
Dude, they're crazy expensive, man. It's crazy.
I know.
It's really expensive.
Tell me.
It's just so convenient for me. It's 2 hours away, dude. That's nothing. Like when you got to go 4 or 5 hours, that's just too far.
Well, the nice thing about having like a little getaway that's such like a practical distance like that is you'll use it a ton. You know what I mean? You don't want to buy something that's a plane ride away. You got 3 kids. You might only get there once a year.
Strazza just wants All-Star Charts, getaway team retreats. That's what you want?
Well, I heard we're having team retreats at the new club for now.
All right. Country club retreats. All right. Are we gonna hit this state of the markets?
Yeah, jump right into it. Let's go.
All right, guys, those of you who know me, and many of you do, and those of you who are new here, I both welcome you and apologize ahead of time for something that may or may not offend you. I tend to do that sometimes, But if you know me, we look at a lot of indexes around here. We look at the S&P 500 and the NASDAQ and the Dow and the Russell 2000 and all that stuff. And we look at the value line indexes and the New York Stock Exchange Composite and the All Country World Index to get more global view, right? You guys know that. But in addition to that, you have like these market bellwethers. You have the most important stocks in the market, both domestically and internationally for that matter. When I think industrials, like I'm thinking Caterpillar, I'm thinking Honeywell. When I think financials, I'm thinking JP Morgan, I'm thinking Berkshire Hathaway. When I think, materials and things like that, I think Freeport-McMoRan, right? There's certain stocks and it's not always the same stock. Like, for example, you could have argued in the past, General Electric was a big market bellwether. Now who cares, right? I mean, General Electric's making 5-6-year highs. Nobody cares. Like literally nobody cares unless you're from Connecticut. And then you're like, oh, General Electric, kind of a big deal, right, Strazza?
It's a big deal.
Right. So when I see Berkshire Hathaway, to me, not just a major component of financials. By the way, the largest component of financials. Fonz, throw up the Berkshire chart. It's the largest weighting in financials by a long shot, by the way. It's not even close. Making new 52-week highs. And Berkshire Hathaway is kind of like one of those, you know, all these bellwethers are important for different reasons, right? Berkshire Hathaway is a bellwether, number one. It's the largest component of the financials index, which you could argue might be the most important index. So very critical. And then also it's just such a diversified, you know, it's essentially its own ETF. I look at it, it's like its own index. You got the Dow, S&P, Berkshire Hathaway, you know, right? You got it's kind of like one of the indexes. When I see that making new 52-week highs, I'm like, oh my God, you know, big deal. Does it make sense in an environment that the S&P 500 is also closing at new 52-week highs? Yes. The NASDAQ 100 is closing at new 52-week highs, right? So if Berkshire wasn't, I would look at that as maybe like a divergence of sorts, right? It's sort of how I look at it. You want to weigh in on that, Strazza? You have like sort of your own thoughts on Berkshire Hathaway. Anything you want to add to that?
I would say yes. Like they're an excellent barometer for the broader market, but where I push back on you is when you say they're an excellent barometer for financials, because they're very different, right? Like they're a hedge fund, like you said, they're just a large investment company. It's more of an industrial than anything, right? They're so diversified. But yeah, it's never a bad thing in broader market terms.
Yeah, you know, it's the largest component of the financials index, so it's not.
It's good from a weighting perspective. They're just so very different than any other financial stock, is my point.
Obviously, right? I'm just busting balls. But with that being said, I would look at that as maybe as arguably even more important, right? Like, you know, add those industrials, like you said, the railroads and stuff like that, you know, the infrastructure stuff that he's got going on. Ton of insurance, by the way, FYI. You know, the math is very good. This is way over my above my pay grade, but the math in these insurance and reinsurance companies, there's a reason why Stephen Cohen's got the reinsurance and Warren Buffett's got the reinsurance. Like, they're not dummies. Okay. Also, you know, within banks, if you want to show the bank Nifty. So in India, for some reason, I honestly don't know why, they don't call it the Nifty Bank Index. They call it Bank Nifty, which I always thought was interesting and, you know, odd. But hey, you know, they do. I'm Cuban from Miami. These people are from Mumbai. Couldn't be further apart. By the way, I freaking love Mumbai. Wow, what a great time it is. Amazing. Strazza, when you get out there, you're gonna have a blast, right? I'm gonna hook you up. You know Shrikesh. You've met Shrikesh, right?
Yes, I have. I'm excited.
He'll take you out. You'll have a good time. He knows where to go. So anyway, Bank Nifty making new all-time highs, right? You know, and then by the way, not, you know, my fundamental friends, Strazza, you can touch on this. You know, tell me that from a multiple standpoint, the Indian banks are actually the most expensive.
Yeah, growth.
Right? So if they're the most expensive, making new all-time highs, probably not a bad thing, right? So I find that really interesting. Berkshire Hathaway new highs. And then the bears, if you want to show the Russell, you know, the argument, the biggest bearish argument for equities that I hear is the Russell 2000. You know, how it's underperforming. You know, just because the Russell 2000 is underperforming doesn't mean it's bad for stocks. Remember, the Russell 2000 underperformed the entire back half of the 1990s, which may have been the best time ever, right? You know, so, you know, it's not so much a leading indicator as it is just a function of the way that current market environment is. But we did argue that if this is in fact an ongoing bull market, you're going to need to see some rotation into some of these industrial stocks, Russell 2000, small caps, things like that. They can't just collapse and start breaking down and expect that the rest of the market's going to be healthy, right? I totally agreed with that. So it's like, okay, so let's reverse engineer the market dynamics here and say, all right, this is a bull market. If this is a bull market, what happens next? What happens next is you get the rotation into small caps. So what do? We bought the shit out of small caps last month. And now here we are, the Russell 2000 is making new 3-month highs. So what does that mean? It's two things. Number one, we're getting super paid. So we're thrilled about that, obviously. But taking a step back, what else does that mean? That means that we are getting that rotation that we were looking for. That would be the next thing to occur if this, in fact, was a bull market. So there are broader implications. Like, great, we made money on this trade. Terrific. That doesn't help us moving forward. What are we going to do next? Like, what does that tell us? How does it inform us? I think it reiterates the fact that this is probably not a bear market, that all these new 52-week highs are, in fact, a characteristic of a uptrend and a bull market, like they always have been in the past, right? Right. So that's what we're looking at. I got one more. You want to comment on that while I pull up the next one?
No, I mean, that's just a characteristic of a bull market, right? People not just getting paid, but getting super paid. That stuff.
Totally. And at the end of the day, this is, here we are looking at the cycle composite. This is a seasonality composite. This includes all the pre-election years going back forever. It includes every year going back to 1950. It includes the decennial cycle, all equally weighted. And this is supposed to be a positive year from a seasonality standpoint. It certainly is so far. And then go to the next one where you just dive into the pre-election years. So here's the pre-election years, going back all the way to 1950. It's supposed to be the best year, the 4-year presidential cycle. And this one clearly is not disappointing. So again, all perfectly normal. And then finally, just show the next 4 charts, go one by one. These are the correlations among components of the market. Here you have your 21-day, your 63-day, right? Here's your 21 days, about a month, 63 days, about 3 months. Correlations among the components of the market in the S&P 500 specifically. In bear markets, when volatility spikes, what do you see? Volatility correlations come down, right? And when volatility, right after volatility spikes, correlations come down during the bull market. When volatility spikes, all the correlations spike to 1, right? Everything moves together. So in bull markets, in healthy environments, right? Forget the labeling of bull or bear, just healthy market environments where investors are being rewarded for owning stocks. That's what this is about at the end of the day. What do those environments look like? Correlations are usually coming off. And when you go one by one, 1 month, 3 months here, you look at the 63-day, look at the 126-day, which is a 6 months rolling correlation. Here we go, continuing to make new lows. And then look at the 1 year. So there's 252 days, also rolling over. This is the slowest one, but all telling the same story. Correlations are coming off among components. That historically is a characteristic of a healthy environment. And it's not the only data point that suggests that, which is the bigger deal here. There's a lot of things saying that, right? That's what I got. What do you think, Strazza?
I think, interesting, right? Because as strong as the correlation was, like it just crested and rolled over. If you look at the lower pane there, it's felt like a stock picker's market since last year, right? But that's mostly because those correlations were linked to the downside, the stocks that were falling, I guess. But within tech and growth, we had plenty of opportunities. So I would say it's going to be even more of a stock picker's market. Is that right?
Yeah, I mean, it's a function of sector rotation. And I feel like market breadth and sector rotation is really is part of the same conversation. So last year, the leading sectors were the industrials, right? Were the more cyclical areas. It's the growth areas that were underperforming because interest rates were freaking ripping. So if you were in those names, and it's funny because they were just bitching last year, they're like, oh, JC, nobody owns industrial stocks. People trade growth, JC, but retail investors don't care about Peru, or London, right? They care about Apple and Amazon. And I'm like, well, first of all, that's not my problem. Second of all, from an institutional perspective, they do care about those stocks, and those were the ones growing. Those were the ones working. Now this year, it's the exact opposite. Oh, those stocks are the only ones working, JC. The ones that, right? They went from like the important ones aren't participating to the important ones are participating too much. It's like, will you make up your goddamn minds? It's all about sector rotation. And sector rotation is the lifeblood of a bull market, right? That's how I learned it. And that's what you're seeing. So growth underperformed, then coming into this year, then growth became the leader. And now we're seeing some rotation and growth is actually underperforming again. And you're seeing rotation in some of these cyclicals, small caps, things of that nature. So I think when you talk about market breadth and you talk about sector rotation, I find it harder and harder to separate those conversations.
I think I was on a Spaces last week, and I think I said it finally. You can't. So if Bear's biggest argument is that the best stocks are going up the most, it's probably a pretty good environment. You know what I mean? Because like you just pointed out, like they'll point to anything, right? And that's what we're hearing a lot these days. It's narrow. What they really mean is the best stocks are doing the best. If that's the biggest negative you can point to, probably speaks to the broader environment. I think that's just where we are right now. Can I say something about Indian banks quick?
Sure.
On a PE basis, totally, they look expensive, but price earnings multiples don't factor in growth at all, right? You're just looking at a static earnings number. If you look at something like a PEG ratio, which just takes growth into consideration.
What's the old peg, the old peg ratio? No big deal.
Look at that. You know what I'm talking about. So yeah, they don't look so expensive then, right? Because there's a lot more growth over in India than a place like the United States or Europe, right?
I do fundamental analysis on the side for fun.
I know you do. I know you dabble. So listen, I gotta admit, I was talking crap about how easy it would be to find Berkshire's investment schedule. I just scrolled through their whole 10K and I didn't find
anybody listening. The good thing about what we do, people are like, "Oh, JC, why do you sell subscriptions?" I sell subscriptions because we have a huge audience that really helps us out a lot. If you guys are listening out there, you guys are smart. I'm looking for a sector breakdown of Berkshire Hathaway that include the private holdings. Like you can get a list of the private holdings, but I want to know valuation of these different companies. It might be really hard because there's so many freaking companies.
No, they put it out. Let me find it.
But how do you what's the valuation on those components?
They will fair value them because they have
they'll reverse engineer the market cap of Berkshire Hathaway.
Well, they have to, right? A lot of them are the equity investment method. So if it's not something that they factor into their own earnings, right, then they have to use the equity investment method and at least reprice the holding. Right, and then they'll take an unrealized gain or loss on the holding for something like Oxy, right? So you'll at least see them true it up.
So you'll see unrealized gains and losses for friggin' what's the ice cream shop they own?
Yeah. So here I'll just explain to you.
What's the name of the ice cream shop with the McFlurries or the Blizzards?
I'll explain.
Dairy Queen, Jason.
Dairy Blizzards, Queen. Man, they'll get you.
This is interesting. Seriously though, right? So I'm looking at their income statement right now, their consolidated income statement. And the way it works is anything that they have like a 100% or a controlling interest in, they'll collapse right into their own revenues, right? So trying to pull up the income statement here. So they have Geico earnings, Geico revenues, Berkshire real estate earnings. Hold on.
All right. We'll figure it out. Get it going. Let's talk about what's moving. Spencer, let's talk about what's moving. Anything good this morning?
I also have a list of how many employees they have at every one of their businesses. That's pretty cool, too.
Before we go to that, I know Strazza had some things on his mind. Strazza, did you want to talk about your altcoins and your real estate now, or did you want to wait?
Let's do real estate quick. I want to know what JC thinks about this. JC's so interested in the real estate market these days.
I really am. I've been catching myself talking about real estate friggin' all week.
So who's right here? What's the read on a chart like this? Because I understand these are two very different asset classes. Just to be clear here, these are both real estate or housing barometers for sure, right? But one of them is home builder stocks. This is, discretionary business. I would argue you could throw it in industrials too, right? But it fits in one of those groups. And then you have REITs, which is the real estate sector, which are companies that are literally organized in a specific way to return most of their retained earnings to shareholders through dividends. And they're usually a lot more specific to the commercial real estate market, right? So we're looking at REITs relative to the S&P 500 in red, just made new all-time lows, and home builders relative to the S&P 500 in green here, just hit its highest level since I think the early 2000s.
Well, home builders are a component of the consumer discretionary space, right?
Just went over that.
Right. So as a leading sector, which consumer discretionary has been, first of all, home builders continuing to go up is one of the examples that we like to give when they tell us that only 5 stocks are going up. Yeah. Well, have you looked at home builders? Are those 5 stocks building homes now too? Right. So it's part of the healthy sector rotation that we've seen. Financials haven't been doing too hot, but guess what? Home builders have, right? So that's how it's kind of like that bifurcation. If you recall, REITs used to be in the financials index, if you remember. For you old schoolers, it actually wasn't that long ago when they switched it, but for you old schoolers, you remember REITs were part of financials. So financials have been those underperformers. You know what's interesting is that REITs are not lower beta, right? They have a beta of 1, which was higher than I thought actually, right? So I think it's really just the outperformance of consumer discretionary, and then perhaps some of the higher dividend paying areas, that are quote unquote safer, areas like consumer staples, areas like utilities, REITs are essentially trading like those.
Can I give you the fundamental analyst answer?
If you freaking must.
So a real estate.
Are you a fundamental analyst now? Is that your new thing?
Yeah, I like to play the game. So I'm a real estate sell side analyst. What I would tell you is one of them is reflecting the economics of the residential real estate market, which is still red hot. That would be the home builders. While the other one, REITs, is reflecting the weakness in the commercial real estate sector. It's mostly commercial there, right? And we have all the work from home issues, big cities, not doing great in terms of people wanting to stay and live there. All of these different dynamics, even to lending itself, right? We talk about these bank balance sheet and some of these commercial loans. There is some sort of there are cautionary signs in commercial real estate that we're not seeing in residential right now.
How about the fact that investors just don't want to hang out in dividend stocks, bro? They want to be buying growth. I don't know if you heard, but the NASDAQ 100 is making new 52-week highs.
They
don't want that shit.
It's going to be really.
You might be right, but I think it's even bigger than that.
I think at a certain point, the rates do have to come down because we have to keep in mind, right, that stocks are constantly competing with the risk-free yield that's offered by U.S. government bonds. And if that risk-free rate is up around 5 or 6%, you look at somebody like NVIDIA right now, they don't pay a dividend, and their earnings yield, which is just the inverse of their price-to-earnings ratio, is about 3%. Right? So the earnings you're going to get from NVIDIA, one of the biggest growth stocks in the market that everybody wants to buy right now, is less than you'll get on a risk-free basis from the U.S. government. That will eventually become a problem. You want those numbers to be more in line because the bond market is going to start to get really appealing. And I know you're talking to your wealthy friends a lot and you're hearing the same thing that I am. People are buying bonds. They're loving treasuries these days. So bonds are finally in a position where they can really, really compete with equities. And that will matter at some point. What do you think about that? We don't sell swag, Rachel. I'm sorry. We're just not in the business of selling swag.
I'm just not convinced about the bond market. I get it. You want to chill out and get some yield, because you'd rather put it in that than other things. I'm not doing that. I could, I obviously, and I'm not, if that means anything to you. I like our income strategy with Sean better. It's also outperforming anything, I like our income strategy with Sean. We're selling strangles. Right, Sean? Is Sean in the room? I mean, we're freaking crushing it, dude.
I get it. I'm not talking our book or anybody's book.
Oh.
I need a book for this, but a lot of people are going to say, hey, I can get 5% and not have to worry. And
people are like, oh, JC's just talking his book. Whose book am I supposed to talk?
Listen,
I can tell you what I'm doing. I'm looking for overpriced real estate is what I'm doing, just to show you where my freaking head is at.
When we were driving through Coconut Grove, that really nice street with all the mansions, I pulled up the Zillow app and mind-blowing. That neighborhood.
That's where LeBron, by the way, that's where LeBron lives. I'll drive you by there next time we're in Miami. All right, what's moving? Before we bring in our featured guest, pretty stoked about Caleb, by the way.
Yeah, what is moving? We're going to talk fundamentals. You ready for that, JC? Are you going to leave for the interview or are you going to stay?
I'm out of here. Go ahead. Bump it, Spencer.
All right, we got a couple today. I did. What's the order of the slides here, just so I can go in order? I guess we'll start with.
You want to hit in the chat? You guys saw those?
Yeah.
Okay.
So NASDAQ here. So that's the first one. Hey, it's nice to see the wheels and the gears of M&A turning. Okay, so NASDAQ, the actual stock, is down
10%.
What last I saw about 9-10% this morning. But they made a large acquisition. They made a $10.5 billion deal.
Who they
buying Adenza. What
they buy?
Software.
Adenza. A software company. Yeah, Adenza.
Adenza. How much? 10.5 billion. Nice.
That's big. That's a lot of money.
A lot of money, yeah.
That's a large cap stock. So this is the trend. Whether it's anybody new in capital markets, if you look at the new IPOs, look at something like TradeWeb, Market Access. These are brokers or they're capital markets companies that are built very differently from traditional capital markets companies. There's a focus on digital. There's a focus on online platforms, online exchanges, online trading, right? That the original industry leaders in the space never had to focus on because everything was done on the floor or it was just done differently, right? They have a much bigger focus on technology. What that does is the incumbents, the major players like NASDAQ, CME, CBOE, they have to really get their game up in terms of technology and go out and acquire these tech companies. So That's exactly.
Can we talk about SIBO making new all-time highs? Hello.
You don't find my point interesting?
I do find your point interesting, but you just kind of like breezed over that. Oh, SIBO, like hello. See, to your point, SIBO's making new all-time highs. Financial. Not all financials are created equal. What were you saying? Capital markets are built differently.
Yep. I'll give you a better one. I'll give you one that is an incumbent, but always did have a special
Financial data and stock exchanges is the official industry group.
Bonds, go to my Twitter, grab that interactive brokers chart. Let's put it up right now. Let's talk
about Strazza loves interactive brokers.
Shout out Greenwich, Connecticut. This is the greatest professional brokerage out there.
That's right. It's from Greenwich. Of course, freaking Strazza loves it. I forgot completely that they were from there.
I'm a big fan of these guys.
When they pitched me to open up an account there, they took me to that bar in right there on that main drag there in Greenwich. What's that beer bar?
Ginger Man.
Ginger Man, yep.
It's where we had all of our happy hours back in the day. All the IBG, it was Interactive Brokers Group. IBG.
All the FinTwit happy hours 12, 15 years ago were there too, by the way, the one in the city.
Let me tell you, Ginger Man's hot, dude. So let me tell you something. Financials. Everybody's texting me last week. What banks do I buy? My answer, none of them. Buy IBKR. Buy the leaders. If financials do finally find a floor, right, and the weakness there has been driven by the banks, go find the strongest names. They're going to probably have some of the nicest legs up. If and when that rotation does come into financials, which it's already happening, right, over the past week, 2 weeks, month, banks are really like one of the strongest industry groups. Go buy the leaders. You don't need to mess with these banks. I don't know if they're really in the clear yet. I would rather buy the strongest names in financials. IBKR, Interactive Brokers, is one of them. It's a solid company. It's been a solid company forever. They do all the right things.
Look at S&P Global. Also take a look at that. And then you can look at the KCE. KCE is the Capital Markets Index Fund, KCE. Take a look at some of those components there. It's equally weighted. So even though like Coinbase is one of the larger components, you're not getting a ton. You're not exactly getting more Coinbase than you are the other companies. So Moody's is in there, ICE is in there, Blackstone, Morningstar. Yeah.
So have you heard any more about the Coinbase thing? I want to talk about it with Caleb. I would probably rather hear his take than yours on it. But have you done any more on this? Have you guys heard about it this weekend? Because people looked into those suits from last week, and I think you'll probably see more weakness today. It's down a couple points. Altcoins got blasted this weekend.
The altcoins did. But you know what? The ones that are getting blasted are the ones that were already in downtrends. Have you noticed that?
Dude, most of them were in sideways trends still, right? They were working on bases, but these bases ended up not being reversals. They ended up being continuation patterns.
I mean, Matic's been going down since February, so that's not anything new. Solana, you can argue, is in a sideways range, but it's really been going down all year also. The Doge, for those that are into such things as dog coins, this thing's been going down since Elon Musk went on Saturday Night Live. So that one's not really anything new.
Years ago?
What's that?
Like 3 years ago now?
Was it that long ago? It feels like just yesterday, man.
20? Early 21?
It was like near the top.
I mean, I could just tell you. I could just pull up a chart of the Doge and just freaking tell you. Let's see it. What?
It was early 21, I think. Oh, November 22. All right, I'm wrong. Really? No.
It was May 21.
Yeah, May 20. Wow, I had to zoom out on that chart. This thing is a disaster, man. You can't.
What do you expect? It's not anything real. It's like a Bitcoin hard fork with a dog on it. Like,
bring Caleb in and let's continue this conversation.
All right, cool. Bring him in.
All right, Caleb Silver, senior market strategist at Cubist Analytics.
Caleb Silver works at Investment.
Caleb Franzen.
Jesus.
Oh my God, Caleb Franzen. I apologize. Oh man, it's Monday. What do you want from me?
Shout out Caleb Silver too.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Caleb.
What up?
What's up, my man?
Look, I'm never going to let you guys live this one down, especially Spencer. Caleb Silver, come on, man. No, I'm kidding.
Oh, I'm so sorry. I feel really bad right now.
Dude, the good thing is Caleb Silver's the man. First, so you got that going for you. You know who he is?
I don't know. You have to enlighten me.
He runs Investopedia.com. He's a good friend of ours. By the way, we should have him on the show. Every time I see him, he just looks younger and younger. I don't know what he's doing. He skateboards to work every day. He lives in Harlem and he rides a skateboard to work. I mean, you know, he makes the best guacamole he ever had, you know. So man of many talents. Caleb Franzen in the house. What country are you in right now?
I've been in Istanbul for about a week and a half, and I'll be here for almost a total of 3 months. So I'm on the move.
You'll be in Istanbul specifically or just in the area?
You know, I think I'm going to do Turkey for a total of 3 months, and I really enjoy Istanbul so far. So I think I'm going to do a second month here and then maybe go a little bit more further west after that. But we'll see. I'm just kind of playing it by ear.
What do you like about it?
Man, the food is delicious. The street food, I was like a little bit skeptical at first, but it's just the culture here. So you just got to dive in, and the people are super friendly. So there's a lot of history here too. So I'm a history buff, and you know, I'm just loving it.
All right. And what about the hours? Working out there, American trading hours, is that all right?
You know, it's actually been perfect. I am a little sweaty right now because I was rushing to get back here. I went to the European side today and did some shopping and, you know, a couple things. But funny enough, I feel like the time difference is actually perfect because for me right now, it's just after 4 p.m. So it kind of gives me the morning and the lunch to, you know, do some research and quiet or go out and explore for a little bit and then dive into work. I'm a night owl. So for me, it's perfect.
Dude, I love it. All right. Well, you're doing all this work and stuff in the mornings and everything and in the middle of the night. Well, what are you seeing? What's on your mind?
Man, so I feel like right now the market is super hot. And so if you're a momentum guy, you got to be riding the wave. And so when I look at some of the internal metrics for the S&P 500 about 3 weeks ago, so I pull the data every Friday and kind of get a lay of the land. And 3 weeks ago, we had a pretty iffy week. We had net new lows on a 20-day and 50-day basis, but only by a marginal amount. But now for the past 2 weeks, it's just been absolutely on fire. So we have massive net new highs on a 20-day, 50-day, and 52-week basis. And so I feel like, you know, there's a classic saying in markets and trading, don't fight the tape. And what's the tape been telling us consistently all year? We've had some one-off weeks, but generally every single time it's been net new 20-day highs, net new 50-day highs, net new 52-week highs. And that's an uptrend. JC, I've been following your work for years and years and years, man. So first of all, it's a pleasure to be here. And second of all, one of the things you always talk about is that you want to see more stocks making new highs. That's the definition of an uptrend. And we're in an uptrend. You can't fight that, right? And so, you know, you talk about how most stocks bottomed last June of last year. And so, you know, we're 12 months into most stocks in an uptrend, making new highs. And, you know, certainly it's a market of stocks, right? That's another thing that you say. And so we're seeing evidence of that as well. And most stocks are making new highs.
You know what really happened with those net new 52-week highs? Another thing JC says is that, you know, stocks need to be making new highs and not new lows in a bull market, right? The new lows finally dried up when that rotation started catching a week or two ago. The new highs keep trickling in about the same rate, but the new lows went away and the net number is obviously going to be higher because of that.
What do you think about this rotation, you know, that we just started getting over the last couple of weeks in industrial, small caps, things like that? You think it's just a blip on the radar or is this the beginning of something bigger?
I think we might see a little bit more strength in industrials. I feel a little bit more confidence to say that than I do in small caps. I still feel like with some of, you know, more of the uncertainties that are still kind of there in the market, for me, small caps just aren't that attractive, especially if we've only seen a week, maybe 2 weeks of evidence of a rotation. It's still far too early. So one of the things I've been saying is, you know, we might be on the precipice of a more, you know, widespread rotation, if you will. I think for me, the fact that we're still seeing a lot of strength in the NASDAQ names, in, you know, mega cap growth. One of the funds I track is the Vanguard Mega Cap Growth ETF, MGK. It's a great fund, first of all, even as a long-term investment. But, you know, I've been doing a lot of TA on that specifically. Yeah, here's the chart that I sent over not too long ago. And look, we're above those August 2022 highs. We're above the January 2022 lows. This is a pretty solid little pivot point here. And so one of the things I've been saying is the last thing we want is to see a failed breakout here. So look, if we go back below those August 2022 lows, I'll be happy to shift into a little bit more of a defensive stance, maybe get a little bit more bearish on the market. But if we're staying above there, party on, right? The music's playing, you got to dance.
You could probably make the same argument about the S&P 500 around 4,200 or so, maybe a little below that.
Exactly.
Yeah.
Exactly. And so, I mean, for me, this looks good, right? I didn't send the chart over, but, you know, a couple of weeks ago, the NASDAQ completed a 50% retracement from the peak to trough drawdown. And for me, that was a solid little line in the sand too. So I was sharing that with investors like, look, if we fall below that 50%, we can take some risk off. But now, I mean, look, the market has been led by mega cap growth. And so for me, I'm going to keep a pulse on mega cap growth as, you know, a barometer for whether or not I should be taking risk off.
And by the way,
and
so another thing to throw out there is, you know, if you do get that failed breakout in that mega cap growth and we fall back below those former highs, S&P drops below 4,200, you know, it doesn't mean that most stocks are falling in that environment. It could very well just be a very aggressive rotation as opposed to just relative strength rotation where some of the other areas do better and large cap growth goes up at a slower rate, right? There's different sort of variations of that, but I would say particularly at the large cap level, if the S&P starts breaking below 4,200 and holding below that, and that mega cap chart that you just showed doing the same, maybe some caution at the index level is probably warranted. At least a more a neutral or defensive posture makes sense. I love that. I love that chart.
Thanks, man. Yeah, and I totally agree with what you just said as well.
Like, you don't want to see these bases that resolved higher, right? Because when a base resolves higher, it tells you the trend is no longer sideways, a new uptrend is underway. You don't want to see that progress come undone during any corrective action, right? That's really what we're saying here.
You wanted to ask him about Coinbase and what's going on there, Strazza?
Yeah, I saw some tweets from you on crypto. Do you have any thoughts there? Because I think what's going on here is really interesting, particularly with the altcoins over the trailing few days.
Mm-hmm. Yeah, I mean, things are just kind of getting slaughtered. We're in like the most unfriendly environment that we could ask for. So if you're ultra contrarian, right, you want to be buying when there's blood in the streets. I think it's like that opening, that moment from The Shining where, you know, like the elevators are opening up and you're like first seeing, you know, the blood coming out of the elevator, but then it still needs to come all the way through the hall, right? So I still feel like we're kind of in those early days. If you look, for example, at like total 3, which is total crypto market cap, excluding Bitcoin and Ethereum, and then if you subtract out USDT and USDC, we actually still haven't made new lows yet on that basis. But I saw a chart that you did this morning. I've been keeping an eye on the same thing. Bitcoin dominance breaking to its highest level since I think May of 2021. And so that's generally emblematic of a defensive environment in crypto.
It is. I mean, do you have any fundamental thoughts? Like, is it crazy to express a bullish thesis on crypto at this point through anything besides Bitcoin and Ethereum? Because that's how it's really starting to look and feel, and seems that regulators want it that way.
So I'm going to say yes and no. And my cop-out answer to this is investors might be interested in looking at the Grayscale trusts. Okay. So they have the Grayscale Bitcoin Trust and the Ethereum version. The Ethereum version, last time I checked, I think is trading at like a 55% discount to NAV.
It's crazy.
This is ultra cheap. So if you like Ethereum here, you may as well pick up some ETHE is the ticker for the Ethereum version. And, you know, I think the Bitcoin one is around 45-50% discount to NAV as well. So, you know, if you're structurally bullish on those and you can't dip your toes into the altcoin universe, you may as well pick up some, you know, form of leverage with Bitcoin and Ethereum specifically.
Basically, you're suggesting that there's some monster arb there. And I would say that there's something similar going on with even MicroStrategy. If you really dive in and do a little bit of basic math on their balance sheet, you know, fair value their Bitcoin holdings, you'll find that they also trade at a very large discount to the Bitcoin they own. So I do like where your head's at with that. Those are probably some good options right now. A little bit riskier, right? Like, just disclaimer, there are some issues there. Some, you know, you can go find things on Twitter about why there's a big discount there.
Exactly.
But, you know, yeah. All right. So that's all your thoughts on crypto. I think that
any exceptions and any exceptions to that? I mean, I agree with everything you said. Any alts that maybe might be bucking the trend?
I haven't.
So I did some. Go ahead.
No,
Steve.
you go.
So I did some analysis this last weekend just to kind of take a look at, you know, what's making new lows on an absolute basis. There's a lot of names making new lows on an absolute basis. And then I also did it relative to both Bitcoin and Ethereum. So, you know, you could take a look at like Avalanche relative to Bitcoin or Avalanche relative to Ethereum, also making new lows. And so, sure, could we see a spike in some of these altcoins? Yeah, sure. But, you know, like when I'm looking at things making new lows on either or both a relative and absolute basis, for me, now's not the time. So maybe soon, but not right now.
What about the dollar here? What are you making of the dollar?
Yeah, let's look at the Dixie real quick. One thing I like to do is look at the 200-day moving average cloud. So I combine the exponential moving average and the simple moving average. So we're looking at the EMA in teal and the SMA in yellow. And so we could see there in 2021, in the second half of the year, we were riding that up as support after we broke above it. Massive uptrend, right? I don't think we've seen much more bullish behavior for the dollar, in 20 plus years. And so now to get back below it there in November, getting below structural alternating support and resistance, we continue to use this moving average cloud as dynamic resistance. And so I don't want to come out here and say we're going to make new year-to-date lows now. But as long as we get rejected here, I think this is key. As long as we get rejected here, we should see bullish tailwinds for risk assets. So I know right now the crypto universe looks a little bit scary, but I'd probably extrapolate more of a signal here for equities than I would for crypto, just because of the macro influences happening in the crypto universe right now. But I think so long as we see a further rejection here, that's great news for equities.
Yeah, I mean, if I'm looking at just this chart in isolation, I would have a hard time being bullish and being like, "Hey, Strazza, we should buy this chart. What stock? Right? This is tough. It doesn't mean it can't go higher." But man, it's got a lot of work to do. What are you thinking? It's got to get 106, 107 to really start being like, this thing's got a shot.
Yep. And but for the
pretty much.
But for the bears too, I mean, we need to see some stuff too. I need to see a new low. I need an oversold reading, which we still don't have on the dollar. So it's really
right. But as far as equity tailwinds, does the dollar necessarily need to be crashing, or is it more of it just not going up is enough? Feel me?
Caleb, what is the best way right now, here today, gun to your head, what is your favorite way to express a bullish thesis into the back half and month and a half or half a month of the year?
2 ETFs, and then you hunt for the constituents within there. One of them is MGK. We just reviewed that chart. The second one is the iShares Expanded Technology ETF, IGV. Top 5 holdings in that fund: Microsoft, Oracle, Salesforce, Adobe, and Intuit. They're all looking really good right now.
Software fund. Yeah.
You're saying the IGV is the software fund, right?
That's right.
Yes.
Yeah.
So basically your answer to my question is stick with the winners, stick with large cap growth. That's where the alpha will continue to be.
Stick with tech here so long as MGK stays above those August 2022 highs.
I like that. Yeah. That's
Caleb, before you run, what does that mean for rate? We got to go in 2 minutes, but what does that mean for rates? What is the behavior that you're seeing in technology? The behavior that you're seeing perhaps in copper and gold, what is that saying for rates?
I haven't looked at the copper gold ratio in a cool minute, but I did look at
just say it ain't going up.
Yeah, 100%. Exactly. And so I think right now yields have been bid up a little bit by concerns about the Treasury issuing new debt. And so all else being equal, more supply of Treasuries getting issued means yields go up. But I strongly feel that issuance will be absorbed by the market, both from money market funds and traditional deposits. They're going to be snatched up, in my opinion. So I think we've seen a little bit of that initial uptick in yields, which hasn't been surprising. That's been my base case. I expect over the coming weeks, we'll see yields roll over.
Yeah. I mean, growth stocks are certainly pointing to that, right? So it's like, who's right, the bond market or the equities market?
Most of our intermarket evidence continues to suggest lower yields, right? We just got to see it. We got to actually see it from yields now.
Yeah.
All right, Caleb.
I think all else. Last thought on this. I think all else being equal, we would be seeing yields roll over. It's just the simple fact that you can't ignore the fundamentals here that the Treasury is out issuing new Treasuries, and so that's going to push yields up in the short term. But I think it's going to be very brief.
Well, is that fundamentals or is that technical? Issuing more supply.
Yeah.
All right. Caleb Franzen, senior market strategist at Cubist Analytics. I just dropped the link to Caleb's research in the chat there, and the link to his Twitter is in the description. Caleb, thanks a lot, man.
Yeah, that was great. Thanks for coming in.
Much love, guys. Good to see you. Yeah, peace. Take care.
Dude,
all right, it is 9.
He's good. I like Caleb.
Listen, that's a great take. Real quick. Ultimately what he's saying there, the U.S. government's trying to figure out what the hell to do, right? We're almost defaulting. We need to raise capital as a government. So they're going to issue more bonds, longer term bonds. And all he's saying there is if you increase the supply in a market without changing demand, the price of those bonds will come down and interest rates will go up across the yield curve.
All right, now hard pivot from the yield curve and interest rates to Kimmy Sokoloff, right? Hard pivot. I like it.
Yeah, she's live trading the open every single day, and we bring her on to ask what she's watching. Let's find out.
Kimmy,
Hey,
what's up?
what's going on?
You know where I'm in Avalon, New Jersey.
I was like, it looks different back there. I miss Avalon.
Kimmy, when Kimmy was younger, she worked here for a summer, right?
Yeah, in Sea Isle.
Oh, in Seattle, next door. I'm too bougie for Seattle.
You know, when you're in college, you can't afford Avalon.
By the way, I don't think anybody can afford Avalon. It's crazy.
Right?
And I just want to add that JC is relying on a Wi-Fi connection this morning.
Yeah.
So if he's laggy, that is why.
Am I laggy? I thought I was doing well.
No, it's
You were
lagging.
you were doing well, but that's the nature of Wi-Fi, right? It comes and goes.
Touche. Kimmy Sokoloff, NASDAQ futures up 50 bips this morning. Are we going with it, or are you fading this?
I have to see the way everything trades. You know, we got CPI tomorrow. We got the FOMC Wednesday. You know, I'm going to go with what's moving, right? So I'm looking at Goldman Sachs.
Selling or buying?
Potentially buying, but it's gapping up. So I have to see. I'm also looking at Baba. Baba's got a little bit, you know, it's nice consolidation this past week. I really need to see it push past this like 86.80 level for potential move up to 88. We'll see if it gets going.
I don't know anybody, by the way, who analyzes Baba more than Kimmy Sokoloff. I just want to say that. Like you talk to me more about Baba more than anybody.
Kimmy, when you say stock like Goldman is gapping up, what is your definition of a gap up? Like, where's the line?
It's higher than the previous day's close. So I don't love trading gap ups. I mean,
it's gapping up 2 points.
Right. So it's higher. I look at the high of the previous day's close, which was on Goldman 336.20. Right. So, you know, Goldman has a big spread in the morning. So I have to see where it opens. Hopefully it pulls back in, closes that gap, and then reverses back higher. Okay. Because I'd be looking for a move up to 340. I was going to say 240. I meant 340. So I'm going to see how that handles that gap over there. We traded Morgan Stanley last week. Nice trade. I'm also going to watch that one too.
From the long side?
Long.
Got a sympathy for Goldman Sachs. What about from the short side? I'm looking for shorts. What do you like?
Me? Well, I keep shorting Netflix. I know people love that name. You know, it's a hard one. I go against the grain and I tell people in the room, you know.
Yeah, but this is a good lesson. Listen, this is a good lesson. This is why I asked Kimmy for a short, even though a lot of stocks are in uptrends, because Kimmy, her strategy tends to be mean reverting in nature, right? And because it's intraday, it's perfect. And it's such a beautiful compliment. Like, seriously, such a great compliment to all the other things that I have going on in my own portfolio. So I really just appreciate that from you, Kimmy. So with that being said, what are we shorting? So Netflix, you got stuff out on the Netflix, not a big deal, right? Tight stocks on Netflix.
Right. But I mean, give you an example. On Friday, I caught like $3 in Adobe short and it was gapping up off of news, right?
Yeah.
So, you know, like I look to those, but now Adobe I'll stay away from because the report's in a few days, right? I'll see how it acts. You know, I'm going to watch this Microsoft as a short too. You know, I want to stay below a certain level.
What's the level of Microsoft?
I wanted to stay below like 330 or so, but I really wanted to push back lower past 325 and head lower, and maybe we head down to the 320 to 316 level.
So on Microsoft, you're looking for a breakdown. You're looking to short the break
down
if it breaks.
Correct. So I'm not going in it now. I'm going to watch it, see if it reverses down. I mean, it seems to be holding support around this 320, 322 area. So you could short down to there. Tesla, I recommended a short in the room. You know, who I trade through doesn't allow me to short Tesla. I know you could do TSLQ, but it doesn't move the same way. If I was able to short Tesla, I mean, if it stays, it's a tough one. It's a love affair with that one. It could still trend higher, but it is so extended as well, right? You could get $2-3 on the short side.
Listen, guys, for you guys, have any interest in this at all? One of the things that I like a lot of things about Kimmy, but one of the things that I really like is that, more than half the trades are in the first 30 minutes of the day. I would argue 85-90% of the trades are in the first hour and 15 minutes of the day. So if you're like me and you're just don't have the time to sit in front of your computer day trading all day, but you could bang out half an hour, 45 minutes, and not even every day, when you have the opportunity, it really is awesome. And again, one of the things that the true diversification is strategies that are uncorrelated to one another. So day trading with Kimmy, that portfolio, and the portfolio that I have with Sean, where we're selling strangles and collecting income, have nothing to do with one another, for example, among other things that I have going on. So just a great compliment to what I'm doing and a lot of other people too. So just a heads up on that.
Yeah, and we just got to be careful this week. We got a lot going on.
You say that every week, Kimmy. Every week. You're like, oh, got to be careful.
JC, that's how she survives this long.
That's how I survive.
I know.
All right. Kimmy Sokoloff runs a live trading room where
Thanks,
she's trading the open every single day. Thanks a lot, Kimmy. If you want to join Kimmy's Room, it is a premium service. There are 2 ways I would recommend you reaching out to us. You can either email us with the email on the screen or call us with that number on the screen, 323-421-7991, or questions at stockmarketmedia.com, and find out how you can get access to Kimmy's Room. She's there. That's where she's going right now. So she's there right now.
I've never, I can say it. I've known a lot of traders for many, many years. Strazza back in the house. I know a lot of traders, and I've never seen anybody as good as Kimmy. That's true.
Yep. All right, 9:22. We had a couple movers we didn't get to yet. If we can go back for a second here, I wanted to briefly talk about WBD, Warner Brothers Discovery, only because this was the best performing stock in the S&P 500 last week.
Did you just yuck that stock? Did you just yuck it?
I mean, listen, these companies are uninvestable. That's it.
They're uninvestable? Why are you yucking? Like, you're just like, are you above it?
Yeah.
Or is it that it's not above support?
No, the economics for streaming businesses are no good. The space is flooded. Everybody rushed into it, and now
what is Warner Brothers Discovery? Like the cartoons and stuff? Like,
they own a whole suite of digital content now that they try to put on one of these streaming platforms and sell. It's Discovery. They got the Warner Bros. They have HBO now too. They have HBO now.
Yeah, you want to know the brands? It's basically a cable company, but now it's streaming because cable is dead, right? So it's HBO, Warner Brothers, Discovery, HGTV, TBS, TNT, Food Network, all TLC, all you get the idea.
Stuff.
And here's the problem with these companies. That's a beautiful list of assets. That's a great suite of assets, right? They can't monetize. The economics, the unit economics continue to come down in this business, right? Look at Netflix. Right, offering lower price points, adding commercials, going after people for sharing passwords. That means that they're at a maturity in their growth phase. These businesses, it's
talk about that parabolic rise after COVID, man. Woo.
No. That's not what that was.
Wasn't that was a squeeze?
Yeah, it was.
No, that was Bill Wang and Archegos.
But wasn't Comcast getting involved, doing the same thing at the time? Or am I making that up?
This was a different ticker back then, wasn't it?
It was a different ticker. Yes.
This was Discovery. This was Discovery.
Discovery.
Yes.
We were running this back then. Oh yeah. Yeah.
So Bill Wang was levered up in Viacom and Discovery, and this is.
And what about Comcast? Comcast was doing the same thing.
That's the other thing with these cable businesses. There's a big mess with all these families. The Redstone, it's a big mess. Seriously.
It is. That's funny you said that. It's like that show. What's that show everybody loves?
It's like Succession.
I just don't understand it. Like, people get so, like, I don't get pleasure from watching, like, disastrous families, like, falling apart. Like, I don't know. People love that stuff.
Regardless of HBO has the best shows. But no company has been able to make money off of HBO's assets. AT&T tried it, couldn't do it. I forget who owned them before AT&T, but everybody just keeps giving away HBO, and nobody's figured out a way how to monetize it properly. You got to just stay away from the space until these guys figure it out.
Sam Biggle says Spencer shares passwords for sure. I absolutely do. I'll have you know. Sharing is caring. I just wanted to point out that WBD was the best performer in the S&P last week. Okay, I just thought that was interesting, and I wanted to point it out. I also wanted to,
friend Spencer, or you're going to get yelled at.
Don't what?
Bringing me these downtrends.
I also wanted
biggest
to point out
rallies come within strong downtrends. So the fact that it was the best performer last week is characteristic of the type of environment that particular stock is in.
Makes sense.
And then last one was XPEV, XPeng or XPeng Chinese EV play. They reported some. They had a lot of pre-orders. They had like 25,000 pre-orders of their new car. So
who knows if they make cars or not, or if it's even a real company.
They might be selling shoes for all we know.
Hey man, you guys asked what's moving. That's what's moving. All right, it's up.
This thing's a real piece of shit, is what it is. Look at this thing. Jesus Christ. This thing's up 10%. It's up 10%. I mean,
listen,
you know, if you're gonna buy these types of growth stocks, you know, I feel like there's better places to be. You know, like it's in a range. You know, could probably grind up to 12, maybe even break out of 12. I'd be a buyer above 12. You know,
the only thing you should be buying out of China right now is VIPs. This stock looks
punch it up. You got it? You got it handy?
Wait, is what?
VIPS.
I'll throw it up. Hold on. Give me one.
It's an internet retailer that we've been all over. So Strazza's.
I mean, have you seen?
Strazza's talking his book here.
Have you seen this thing lately, though?
Yeah.
God.
We talk about it all the time. Yeah. VIPS. It's internet retail in China.
Okay.
Again, who the hell knows what they do? They could have cruise lines. You know, who the hell knows?
I don't trust Chinese stocks in uptrends.
I don't trust Chinese stocks at all. We're not marrying them. We're just dating them. We're just renting them.
All right.
You know.
Slide one.
Throw it up. Look at this sucker.
Okay.
You know, sometimes they just don't look like the others, and this is a great example. I also like Pinduoduo on this little bull hook bear trappy thing.
But my point before is that this one looks a lot like those other growth stocks, like software that Caleb was talking about, and the Dow Jones Internet and all that stuff.
It looks like a U.S. tech stock. Jason.
It looks like a U.S. tech stock. Yes, you took the words right out of my mouth. That's exactly right. It looks like a U.S. tech stock, and the XPEG looks like a Chinese tech stock.
Yeah, it's exactly right. There aren't many great opportunities in China still. That's been the case for several years now. We'll be all over it when it happens. You know, you guys give any weight to this whole demographical cliff that China's falling off of? Because earlier in my career and when I was in college, I mean, China was all the hype from a global perspective. Like, it was all about China. Everybody wanted to invest in China. Now, I mean, you can't pay somebody to say a good thing about any of the economics going on in that country. And ultimately, people are predicting that their population is going to be like cut in half. You know, looking 50, 60, 70 years out, and that's really going to weigh on them because, remember, unlike the United States, having babies is the only way to grow the population in China. There is no immigration, right? So basically, like in the United States and in free countries, it's a free market system where the population is really driven by supply and demand, right? And if too many people are there, some people will leave and then others will come. China doesn't have that. They got to have babies, and the population is driven by that. And if it dries up, like people are saying, there could be some real problems there, and people are saying that'll be a headwind for decades.
All right.
Futures
you have
up,
anything on?
I was going to say NASDAQ futures up 50 basis points. S&P's up 22 basis points.
Real stuff with me.
What's that?
Nobody ever wants to talk about real stuff with me.
What do you mean real stuff? You're talking about China. There's nothing real there. This is all fugazi, right? Which I'm fine with. Like, as long as I can sell it at a higher price than where I buy it, I'm good. I don't care if it's a scam. That's not my problem.
I have a question. Who saw the cover of Barron's this weekend?
Let's go. Then.
Wow.
Please.
It's crazy, right?
Yes.
Fonz, throw up the cover of Barron's. Look at that. The market has legs. Throw up what they were saying a year ago. Do you have that one handy? Throw up the one from a year ago.
You know, it's amazing what 20% will do, right, JC?
Don't get me started. You know, listen, man, if you think the 20% down means we're in a bear market and 20% up means you're in a bull market, like, you're the sucker. You know what I mean? You know, like, when they take about poker, if you sit down at the poker table and you don't know who the sucker is, it's you. right? This whole 20% thing, it's that, right? You know, the fact there's no magic about 20% funds. Where are you at? Throw the old one. Throw the one from a year ago.
You know, I'm going to be completely fair to Barron's and play devil's advocate with you right now. The article, if you read it, really actually focused on the broadening of participation. And that was the call. So they're doing nothing else but saying the exact same things we were saying last week. They just got a far sexier cover to drive the clicks for it.
You know, and listen, this isn't any bad take on journalists or anything like that. Quite the opposite. They're actually very good at their jobs. Like they which is to sort of, you know, put their ear to the ground and talk about what people were talking about. And, you know, in May of last year, this is late May of 2022, the new 52-week lows list peaked just like 2 weeks later. So like they nailed it, but they were really aggregating sentiment, and magazine covers and things of that nature just do a good job of that, right? And we knew that a year ago there was a ridiculous amount of bears. We have the hard data, right? The individual investors data, the advisory data, you know, the Bank of America fund surveys, you know, what is the long-term one, the overall economic, what do they call it? The consumer sentiment going, you know, 50-year lows, like all of those things are saying the same thing, right? And now we're seeing the exact opposite, right? So now it's like, oh, bull market has legs now. We're going to put this unicorn thing, you know, right?
I will continue to make the argument that the best sentiment data is unmeasurable or not easy to quantify. And these are the things that I'm talking about.
Sentiment is hard. And I'll say it, I've said it before. I think we do better sentiment data than anybody else, or at least maybe not better than anybody else, but we do very good work. And I would put us right up in there in that category. Well, and it's still not perfect. It gets far from it, you know.
No, but here's why that is, right? We do the work that we think is necessary and needed, and not really much extra, right? We're not trying to give people all the sentiment data. We're trying to do enough so that we can make a call on sentiment, right? So we do enough for that without going overboard. I don't think you need to look at 100% of sentiment data to know where it's kind of at.
And by the way, usually we're somewhere in the middle, right? Usually it's not an extreme. And that's really where I'm interested when we're at extremes. Yeah, it's usually somewhere in the middle.
When we're in the middle, I really don't wade into my process at all.
And even when we're at extremes, where does it fall in terms of weighting and the overall decision making? It's still not high.
10%.
Right. So it's important to put that into context.
Can we just talk about, all right, real quick, I haven't had a chance to say this. I looked into these lawsuits more for Coinbase and Binance. I tried to pull my money out. I waited 3 days. I said it on here. I would be taking my money out of Binance. By the time I finally got around to it, it was 2 or 3 days later, this thing got worse. They locked up withdrawals. I couldn't get my money out. It's not the end of the world. I'm not worried about it. I think I'll be able to now, but they're freezing assets at these companies. And effectively, the SEC is saying you can't invest in crypto in the United States. Like, consumers will not have an option, right? Because they're listing out all of these different cryptocurrencies and saying that they're securities and they're unregistered, and the SEC has not given them a process for registering. So basically they're saying it's all outlawed. It can't happen within our borders. So that's why you're seeing all these altcoins go. Something like Bitcoin or Ethereum. Ethereum wasn't named as a security. It's holding up better. Bitcoin people are going to find their way to buy anyway. But these altcoins, the U.S. government is basically saying there will be no market for it here. And that's big. That's really big news. And it's anti-American. And I think it's a goddamn disgrace. But
wait, I think we had some charts. We had some altcoin charts. There we go.
Strazza.
I mean, I'm surprised that you're not more upset about this. They're literally not. Listen, as investors, you should be smart. You know, the one way that they could register their securities, and Brian Armstrong is such a great leader. He said, no, absolutely not. You have to implement the accredited investor laws, which is one of the worst laws that we have here in the United States as far as capital markets are concerned, right? It basically prevents people with less wealth from investing in all of the options that are available to wealthy people. And they want that to happen with these altcoins for them to be listed as securities. Armstrong said, no, we're not doing that. And that was really the only option. So now either they delist all of these things, which Robinhood has already started doing, because at least Robinhood has an equities business that they can lean on. Either they delist all these, or They pick up the ball and they go home, and they literally leave the United States and stop doing business within our borders. The SEC is shutting off all the on and off ramps, right, through the banks for these crypto companies in the United States, and they're really out of options at this point. So this is really, really serious.
Strazza, when you get older and you have 3 kids, and you've got bigger problems in the world than the SEC pulling some bullshit. I mean, you'll be less stressed out about it too. I get it. Listen,
we should be able to trade these things. I mean, come on, the risks. You should. I
get it. I guess I just don't care that much. It's like whatever. I guess I don't take it personally. I guess. I mean, it's like whatever. All right, then we can't trade those things. I mean, maybe I wish we could, but I wish somebody would come bring me a bunch of king crabs like in the next 5 minutes. But that's probably not going to happen either.
I care a lot. I think it's scary. We're trying to, dude. They're protecting the U.S. dollar. They're using our dominance from a forex perspective as a weapon now.
Do you think I should care more, Spencer? Do you think I should care more?
Absolutely. This is bad.
Do you think I should care more?
Yeah. I mean, I think you should care more about a lot of things, JC. So
this is a big one.
I'm interested. Okay, I'll say that this is interesting. This is probably going to be the biggest story, one of the biggest stories of the year for capital markets, right?
Yeah.
So, I'm definitely interested.
I would love to go.
I'm glad you guys are interested because you can keep me posted on what's going on.
I would love to go to the crypto conferences this summer. Maybe I will drive up to one of them just to hear what's going on with this issue. This is huge, and I don't know how these different companies and crypto platforms are going to choose to navigate around it. I don't know if they're going to hope for some sort of regulation to come and provide a clear path for them to enter, the capital market system in a way that the government is okay with, or if they're just going to say, forget it, we'll try to come back to the United States in the future and walk away for now. But that would be, I think, the worst outcome. So we'll see.
Sam Biggle says, I'm paying for my new condo in Dogecoin. Listen, bro, I got too many kids to have a condo. I wish I can get away with getting a condo. It's not going to fly. I got to buy a house like 3 times as much. Yeah. Good thing I didn't own the doggy coin. Otherwise, I'd be much further away from the new house situation. We got another question about SoFi, by the way, up 6% here on the open. SoFi, take a look at slide 1. Pull that up, Fonz.
Oops.
So you can see that the SoFi
has had an absolutely relentless bid in it for 2 weeks now. It's insane.
But look, SoFi looks like an American tech stock. PayPal looks like a Chinese one. Right? Another good example.
Yeah, that's true.
All right. Strazza, did you have anything from the hot corner today?
No. I mean, 2 GameStop directors bought stock. But
what did they buy? How much?
Like 300 combined.
$300,000 combined?
Yeah, 350 maybe.
Yeah,
I'm not interested. No, nothing really stood out.
Wait, what about
rare. I
UiPath?
think there's always some tidbit from the hot corner. Explain to everybody what the hot corner is, for those who don't know what the hot corner is.
Wasn't there UiPath?
That's it. The ARC news is really a snooze fest. It barely budged in terms of.
What's the ARC news? Oh, the path.
Yeah.
New path.
Listen, ARC stocks are working. That's a good list to look at for long opportunities right now. ARC holdings. Any type of speculative growth index, right? You can make your own.
DHC, that Adam Portnoy, $14 million, a lot of money. DHC, what is that?
Yeah, he keeps buying this crap REIT. Oh, we saw it.
Crap REIT?
Yeah, we saw it last week too. Mm-hmm.
What's so crappy about it?
It is a $600 million REIT that over the course of the past few years is in like a 97% drawdown.
Got it. So literally by definition.
Crap REIT.
All right.
It should have a higher yield then, shouldn't it? It's not paying much.
Listen, if you try to reach for these yields in the real estate sector right now, I'm sure there will be some big winners, but be careful. Be careful out there.
Before we bring on Sean, let's look at the chart report briefly. And then we'll get Sean McLaughlin on.
Do it.
All right, this is Friday's edition of the chart report, the best technical analysis from the top technicians. I liked this chart, if I can scroll here for a second, from Callie Cox. How far down do I have to go? There it is. This is May to June. Sector performance, May to June. What worked in May, not working in June so far. It's early. I thought that was fun.
I like the chart from David Cox.
Oh,
One of our friends. We should have Dave. Get David on the show. Reach out to Dave. He's good.
You know what? You know what we call Callie Cox's tweet there? We call that rotation. That's great stuff. Yeah.
So here's David Cox, our good friend up in Canada. I was just hanging out with him in New York a couple months ago, and really pointing to that negative correlation, between volatility and stocks. Volatility coming down. Making new 3-year lows. I'm told we're in the middle of a crisis. I guess I just don't see it. S&P 500 making new 52-week highs, VIX making new lows. Keep that in mind.
All right, this is the chart report. It's a free newsletter that goes out every single day. If you want to get it, just scan the QR code onto the screen. It'll take you directly to a sign-up page where you can get the best technical analysis from around the world of Wall Street. There's also a link. If you're more of a link person and not like a QR person, there's a link in the description of this video on YouTube to get this issue.
What constitutes a QR person? Somebody who's used it more than once or more than 5 times? Like, what is a QR person?
Some people just don't like QR codes. They don't understand them. I don't know. There's a link in the description. Okay, if you want to click on the link or scan
is it
the
like
code
a mental disorder, like being afraid of heights? Is it like one of those?
No, it's just a personal preference. Oh, gee, dear Lord. All right. I see options, Sean McLaughlin here. Let's get him on the show. Sean joins us. Actually, he joins us a few times a week, and he is the head option strategist at All Star Options. And where's my Sean bumper?
Very handsome too. Very handsome gentleman.
Where's my Sean? There it is.
Shawnee, baby.
I think I've got one of those mental disorders you were just talking about, the QR codes. I'm a late adopter.
You'll figure it out. You do more complicated things, trust me. We were just talking about the volatility index making new 3-year lows again last week. These are the sorts of, environments where it pays to, buy calls cheap and go out as far as humanly possible. Right?
Yeah, that's what we've been doing over the last couple of weeks, right? We not only have we been keeping it simple and doing simple long call trades, maybe occasional call spread, but we've also been going out into the smaller cap area, trying to play catch up. We think there's a lot of alpha that can be generated in some of the smaller caps. That said, JC, last week we got into the big daddy of them all. We got into Apple. I pulled out that Apple chart, and I feel like Apple's one of those names that it gets so many haters, especially when it's up near the highs. Everyone wants to fade Apple, but how can you look at that chart and be like, A, this thing's not going to do a $200 roll, and B, how's it not going to make that $3 trillion market cap that everyone's talking about? I mean, what about this chart says to you that that's not going to happen? I mean, unbelievable. And a couple of facts
some people like to go and look at their charts with preconceived notions, and then they blame the chart, for them getting it wrong. But they you can, how people are. I mean, humans are silly, Sean.
Yeah. Well, and I don't think I have a chart. I don't think the guys have a chart for this one. But the other thing that stood out to me when looking at the Apple chart is the implied volatility, which measures the pricing of Apple options right now, is at the lowest levels it's been in over a year, which is consistent with the entire market, right? Options are so cheap. So, last week I went out and said, all right, I'm going to go out to January, not as far out as humanly possible as you just mentioned, but I did go out to January and I bought the 200 strike call options because I just can't imagine an environment where Apple doesn't go to 200 and beyond
by the
in
way,
the next 6 months.
That is as far out as humanly possible for what you're willing to pay. Is what I'm saying. Like if you could have gone out further and it made sense from a liquidity and a money standpoint, you would have done that. No?
You are correct. And by the way, shout out Fonzie, the chart ninja. He just located that implied volatility chart for Apple. So there it is right there. You could see the trend in Apple options over the last year. And they're the cheapest they've been in a long time. So if you're bullish in Apple, yeah, you can go buy the stock. Nothing wrong with that. But if you like trading options, man, buying call options in Apple right now is a very good value.
How about the on the old industrials, that Caterpillar situation? One for the good guys.
Oh, that Caterpillar, we're already free riding on that one. We sold half of our calls last week. That is looking real good.
And then compare that to a situation with the IWM small caps and the free ride there.
Same situation, a different trade that we did on IWM, but yes, IWM, we did a risk reversal. We sold puts to finance the purchase of the calls. We have since sold half of our calls and closed all of our puts. But both trades are working great. And by the way, shout out to you on the cat. I begrudgingly giving you a shout out. I think both Strazza and I were we liked it, but we didn't love it when you called it out.
You guys liked the risk reward. You didn't like the trade. You liked the risk reward.
Yes. Okay. That's fair. I did like the risk reward, and that's why I got into it. But, I was just like, man, there's so many other better charts out here to buy than this one. But you were like, no, let's get into cat. And I'm glad I listened to you, Big Daddy.
Well, it's not so much about this chart is not as good as the other ones. I mean, yeah, you can argue that is true. This chart is nowhere near as good as a lot of other charts that we look at. It was more so just reverse engineering what a bull market looks like, what would come next if this is in fact a bull market. And it was rotation into small caps and industrials, in my opinion, is what would have been next. So it was more a bet using the Caterpillar as a vehicle to express a bullish rotation into industrials, and then using options as the vehicle to express the bullish thesis on Caterpillar, right? So it was kind of like, that's the thought process, more so than would you buy or sell this chart? Like, it had very little to do with that particular chart, as a matter of fact, right?
Strazza, this is just another example where you and I are playing checkers and JC's playing chess. Well done, buddy.
You're not thinking fourth dimensionally, to quote Dr. Emmett Brown,
Right on. So what else is on your mind, boys? I'm here for recess. I'm just here for recess. Can we get right to that?
Should we jump into recess and we'll take some questions?
It's
Spencer?
Why don't we take chat
Let's start with questions. Let's start with questions from the chat. If you have any questions, drop it in there, and then we'll do recess, all right?
All right, fair.
All right.
Whoa,
we had a
meow,
few
meow.
here.
Look at that.
Where did that cat come from?
Strazza's the crazy cat lady of the show.
So what
there
do
was
you
a
wanna
few
talk about?
questions. There was a few questions throughout the I'm scrolling up here to find them though. So give me a second. Where
Talk about
was
the
it?
SoFi.
Yeah, we talked about that. Do you use stage analysis?
No.
What is the stage analysis?
I like
I
the
don't know.
Wyckoff method.
I don't know what any of these things are. What are you guys talking about?
Don't worry about it.
What is
Paul-
sorry, go ahead. What is a stage method and what is a Wyckoff method?
Wyckoff is just about accumulation and distribution patterns. It's ultimately, they just put a huge emphasis on basis, similar to how we do, but they have their own language and kind of set list of things that they look for, which is probably far more specific than what we're doing. And stage analysis, I don't know who exactly it is, but it's covered in the CMT curriculum.
Stage analysis? Is this what's his face?
Not Elliott Wave. He's not talking about Elliott Wave.
No. What's the guy? What's his name? Oh, Brian Shannon Weinstein. That's the one. Thanks, Ken. See, I told you our guys are smart. Thanks, Ken. Stan Weinstein. Is that what the stage analysis is? Yeah,
so.
right.
I think so. Yeah.
All right. Like a stage one of a base and then stage two breakout, like that sort of stuff.
Listen, apparently his stuff is great. I'm not familiar with it. I'll be completely honest.
Paul had asked about XPEV calls, XPEV calls.
Yeah, they're off the chart. It's slide one there.
Uncle Carl update. There was no update there.
Uncle Carl. I love how you guys call him Uncle Carl.
There is an update as far as Illumina is concerned. If that, I don't know if that's what you're referring to.
Oh, they're
Remember-
referring to the disaster of his stock.
Dude,
Oh,
this thing's
okay.
up 15% XPEV. Just an FYI. This thing is a beast. The guy was just running my mouth talking shit about it earlier.
Don't touch it. What a mess. It's stuck in a range.
Hey,
I mean,
from an options trading perspective, he was asking about the call options. I mean, look, you could play it with calls if you want to define your risk a lot more cleanly, but from a percentage cost, I don't like it. And Strazza hears me riff on this all the time. On these cheap stocks, these $10 stocks are cheaper. I would rather just buy the common, so I'm not having to like be so perfect on my timing to get into these things. I would rather just play it with long stock, and maybe if you're really worried about the risk, maybe hedge it with a long put and out of the money put. But I don't know. For me, I don't like buying calls on things like this. I'd rather just buy the stock.
Like, can we just think about this one, like, fundamentally? Like, do you really want to own an EV maker in China? Is that like a business you even want to be? Like, think about that. They wouldn't let Alibaba succeed, breaking up that company. I don't know if you want to mess with the, transportation market.
I was hearing JC riffing on his thoughts on China earlier, and while I won't be as gruff as he is about it, I do agree with him. It's, investing in China is hard business, man. I mean, they could pull the rug on you at any moment for any reason. If you're playing with China, they can't be anything more than a quick short-term trading vehicle. I mean, forget investing, at least not for now.
You know what else? Like, since we're on this uninvestable theme today, would you guys buy these airline stock breakouts? Nope. Another place that's just uninvestable. This industry has proven, year after year, my entire career, that they just can't figure it out.
Has an airline breakout ever held?
Well, here's the problem with airlines. This is simple, guys. We all fly, right? It's not a nice experience. They can't figure it out. We complain every time we fly about how shitty it is, but these companies still can't make any money with how much they're charging for these tickets, right? Their margins are almost not even there, right? Like, it's not a good space, and it probably never will be. If you had to pick one, it's Delta, but no.
I've been watching that documentary, just came out on Netflix, about the Smartless podcast. This is not about Smartless, but it's about flying. Yeah. And they did a lot of private flying on that show, and I'm like, man, private airplanes now, that looks like the way to travel.
Definitely.
But
That's Berkshire. That's Berkshire.
Yeah.
Berkshire owns NextJet.
NetJet. First of all, it's NetJets, isn't it?
All right, NetJet.
NetJets. Mr. Stephen Cohen also had a very large interest in that company at one point. But yeah, it's a thing. And I think eventually a lot of people will be able to pay for a subscription service where they can fly privately for a very reasonable price point. And I can't wait, because I have a miserable experience every time I go to the airport, just to be honest. Like, I hate it. And frankly, I'm stuck flying American down here because they do like 80% of the flights out of Key West. And I don't know if there's a worse airline. And the internet never works.
All right. There was a question from the chat. What was the ticker? It was I had it. ROIV. ROIV. Yeah. We have the chart here.
That is a
Thoughts
stock
on
I'm not
ROIV?
familiar with.
Me neither. I think it's a biotech. Yeah.
No.
No. Okay. No thoughts on that. Cool. And then we'll do one more. Where was it? It was. Do you always look at support and resistance for relative strength at the same levels that price is trying to break through?
You're saying like the equivalent levels. So, for instance, I wish I had a good example right now because there's a million of them out there, but you can look at the August highs on an absolute basis and then look down to the relative trend and also see the August highs. I think that's what you're asking. And the answer would be yes, right? If we're breaking out of some base above the August highs on absolute terms, I want to look to the relative trend and see us also taking out the August highs. And in a lot of these growth stocks right now, if you do chart them against the broader market, you will see very similar bases shaping up. And you could look at them and compare to the absolute trend. You'll see exactly what I mean. They mimic one another, right? And it's just another form of confirmation. I encourage everybody to go watch the Lunch and Learn. We talked a lot about this exact thing about 2 weeks ago now.
Relative strength. I mean, when you talk about indicators, I wouldn't even put relative strength as an indicator. It's just price. Relative strength is still price because you're comparing the price of something to the price of something else. So it's like still in the realm of price as opposed to indicators like momentum and other things and other oscillators. So relative strength to me, not only is it secondary to price, I would put it as all part of the price conversation. It's that important.
It's a good point, JC. Yeah.
Money goes where it's being treated best.
Yeah. Somebody asked a question to me on Twitter. Let's just stay on this topic. They said, if it's outperforming the sector and industry, is that enough? No, that's great. But that's like 2 out of 3 steps, right? You want to see it
What if the sector and industry suck?
Right, exactly. You want to see it outperform the industry. You want to see it outperform the sector, but then you got to go and check it against the broader market. And really, you would weigh the relative trend more, the bigger challenge you give it in the denominator, right? So if it's breaking out against something like the NASDAQ 100, wow, impressive, right? Because the NASDAQ is strong. You always want to make sure you're benchmarking against something that you would want to own.
Yeah, if you're benchmarking it in yen, you're not helping yourself too much, right?
Or if you're benchmarking against airline stocks or cable companies, right? Of course, you'll see some leadership there in anything that's doing halfway decent. So you always want to go to the broader market to it.
Hit the bumper, Spencer. I got a hot take.
Woo!
I know you do.
Hot take. All right, I'm going to throw it out there. I think personally, for a father with a family, I like Avalon and Stone Harbor, right? It's its own island in New Jersey, in the southern tip of New Jersey. Throw up the map so people know where it is. Essentially east of DC, all the way southern. It's basically the Key West almost of the Jersey Shore. All the way as far south as you could possibly go. Cape May is as far south, but it's almost down there. I like it better than the Hamptons all day long. Give me a house here over the Hamptons. Hot take, I know. That's how I feel. I really like it here. Great food, very safe, good people, no riffraff. I like it a lot.
The Key West of New Jersey. Wow.
I've never heard of that before. That's a new one.
Like, all the way down, in other words. You got to go all the way down.
All right. Well, since we're shouting out our favorite weekend spots, this weekend I just spent in Manitou Springs here in the mountains in Colorado. Shout out to Manitou Springs. Great little place to hang out, spend a couple of days. What's really cool about Manitou Springs, all around town, it's like a small little town, maybe 3,000 residents. All around town, they have these like little fountains that come up, spring water that are coming up out of the mountains, and they all have different flavors, and it's all like weirdly carbonated, and it's all filled with minerals that are very healthy for you.
You drink it?
Cool.
You drink it?
Of course. Yeah. It's totally drinkable. Yeah.
Coming out of the ground?
It's coming. I mean, people, they've built like actual fountains, but yeah, it's coming right out of the ground.
That's cool. That's really cool.
It's amazing.
Yeah, it's cool.
Hey, also, I also want to give a shout out to, I hate giving JC so many shout outs, but I'm going to give him a half shout out right here, JC, a half shout out. Last week, you said the NBA Finals are going back to Denver 3-1. You were correct. Wrong team, though.
Oh.
I like that.
Sean just learned that the NBA has a team in Colorado, so now he's all of a sudden Mr. Basketball guy. All right. We'll see what happens tonight.
Yeah, it was a bummer. I had a fun time in Miami this weekend. Like I told you, JC, Coconut Grove I thought was lovely. I went to
Renaissance. It's coming back.
Yeah, it was great.
I like Coconut Grove. Good area.
Yeah.
I've never been there. And I like just exploring all the different neighborhoods. So that one was still on my list. Found a little like Italian import shop there. Obviously went and had to check out like the vinegar and olive oil selections, get some cheese. JC had a Barolo wine vinegar. And a rosé wine vinegar, which I got. The Barolo was just too expensive and crazy. But I'll try it on my tomato salad. I'm looking forward to that.
JC, what's that beautiful old mansion that everybody can tour that's on the water right near Coconut Grove? You know what I'm talking about?
Yeah. Vizcaya?
Yes, Vizcaya. That place is amazing.
That's where like they take like wedding pictures and stuff like that, and like the girls with their quinceañeras and the sweet 16s and stuff. That's where they get their picture. That's what that is.
It's beautiful. I can't believe somebody lived there at one time. Amazing.
Yeah. So it's a museum now. You can go check it out. Very cool. So anyway, that's all I got. Yes, we didn't talk about the NBA today because JC and I are.
We'll talk about it tomorrow when Miami's coming back home.
Hey, but hey, in today's edition of Florida Keeps Winning, Panthers just came back, I think, and tied it up 2-2, right?
No, that is not what happened.
All right, 3-1. 3131.
All right. I spent the last 5 days in the great state of Maryland. Picked some crabs yesterday. It was fantastic. If you've never picked crabs, it's an experience.
I've never picked crabs. I've only eaten them.
Don't you just drop a trap with like chicken in it?
No. This is after they're already dead.
Oh, you were just picking them at the table.
That's what it's called.
Oh, right. You're right. My bad.
You were like going crabbing and actually catching.
No. He was picking crabs. Yeah.
All right. In that case, I have definitely picked crabs.
I've definitely picked crabs. Yeah.
You get the mallet and you bang it anyway. Okay. All right.
By the way, Sam in the chat just chimed in. No one cares about hockey. Sam, no one cares about Florida hockey, but this guy cares about hockey. So shut your mouth.
Sean thinks he's Canadian.
Did we talk about the live golf news last week?
You did, yeah.
You did. We got to go. All right, guys.
All right. That's a wrap for our show. Thank you to our guests, Kimmy Sokoloff, Sean McLaughlin, and of course, Caleb Franzen. Thank you for watching, especially those of you in the YouTube chat for all the questions, the comments, concerns. Drop us a like, hit that thumbs up button. We'd appreciate that. Stay tuned for more. It is Monday, so that means we have the Flow Show, 3 o'clock. No, 2:30. 2:30, I think. 2:30. Regardless, youtube.com/@stockmarketmedia. That's where you'll find all of our content there. And we'll see you later, everyone. Have a good rest of your day. Happy trading. And that's that. Have a good one.
Adios.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off.